The big guns haven't really entered the space.
No, but they're coming.
What am I going to do? And the answer is, I'm just going to own it. Just going to own it, man. Just buy it and let everybody else figure the stuff out. 100,000 entities are going to come up with a way to utilize digital energy or develop digital property. Just own it.
Yeah, and because network adoption, it'll just keep working. It's magic. So here's another thing I want to think through, because I don't really know the answer to this. Humans are humans, and we're going to create leverage. And we talked about the monetization or the financialization of assets. And we see it at retail levels. You talked about this 20x, 100x. But we're going to see it at scale again, because that's what humans do. Is that going to change some of the properties of what this looks like in the future? Are we going to introduce some of the risks and some of the downside that it's not really there in this marketplace now?
I think that the number one critique right now of Bitcoin is it's volatile, but I don't think it's volatile because it's digital property, digital energy, or because of all of the constructive uses of it. I think it's volatile because there's too much leverage in the offshore crypto exchanges and the altcoins. I think that what's happening is someone buys an altcoin with a 10x lever, it moves up 20%. They cross-collateralize into the second altcoin, and then they somehow collateralize that, or they tie that into Bitcoin. I think that 20x and 100x leverage in the offshore crypto exchanges has been driving the volatility in Bitcoin. And I think that as we come off of that, I think that we're not going to see 20x leverage. Coinbase doesn't offer 20x leverage.
No, but the investment banks will.
Well, I mean, like we just saw the equity swap issue with Archegos play out. But I can tell you that I've traded with all the wirehouses for 30 years with hundreds of millions of dollars. They never offered me an equity swap. Okay, it's not very common to be able to get an equity swap, even if you have a $500 million portfolio. So 99%, maybe 99, everybody I know, they're not trading with equity swaps. The highest amount of equity or the highest amount of leverage you see in conventional markets is like 50% or 2x leverage. And so I'm not really concerned about that. The future of Bitcoin is transitioning into the public markets and the institutional investment markets where the leverage is normally going to be 2x or less. And I think that it'll be delevered more than it'll be levered. I think that if you look at the velocity of the crypto markets, people are taking 10x and 20x trades, and those things are being marked to market every minute of the day on the weekend with forced liquidation. The reason you get volatility is when you put 10x or 20x through something that's got. If I have a $2 billion market cap and $30 million of this stuff is trading, and I lean on it with 20x leverage against something else, then I'll move that number. If I'm cross-collateralized and I'm able to go back and plug that into Bitcoin, you'll actually drive some Bitcoin volatility. But, the volatility is coming from the crypto markets. It's not coming from conventional users of digital property.
If you take leverage in the New York Stock Exchange or the futures market, you have margin. Somebody calls you up and says you need to pledge more capital. The crypto markets are the opposite. It's like, we control your margin, we'll liquidate you immediately. You get no choice. So you kind of know what you can lose. In futures markets, you don't know what you can lose, because in the end, if you can't pay your collateral the next day, your margin the next day, you're in shit street.
Yeah, I think the conclusion is, look, if you look at where Gensler is going, and where the regulators are going, they're going to regulate the stable coins. They're going to regulate the DeFi exchanges like Uniswap. They're going to put more regulation on the offshore crypto exchanges. They're going to put more regulation on the onshore exchanges. And as they do that, one of the consequences is leverage is going to get taken out of the system. Like, I watched Bitcoin go from $9,500 a coin to $10,500 a coin in 3 minutes, like while I'm on the phone. And then I went to bed and I was short. I was trying to buy it at 9,500. I was short and I went to bed and it came back to me by 3 p.m. the next day. But I damn near had a heart attack, right? Like literal heart attack. When BitMEX went offline, I watched half the velocity disappear. Sorry, half the volatility disappeared. Like you could literally see like the volume got cut in half and the volatility came way in. And so I think that you're seeing progressive waves of normalization as these markets get less levered. And I think that that's going to continue over time. I don't know that it will end tomorrow, but obviously my long-term thesis is you look out 2, 3, 4, 5 years as more and more large institutions hold this with less and less leverage, the volatility on Bitcoin decreases.
So here's a final question I want to think about is, okay, let's go out 10 years now and just think about, okay, there's this kind of digital asset world with DeFi and everything else. Where's Bitcoin's role in that as the apex predator? What does that mean? Does it mean all DeFi is on Bitcoin, or it's a broadly spread digital asset world with this new technology and Bitcoin is the kind of base layer collateral of the entire thing?
It's the highest quality digital property. We want to create a digital property running on a decentralized network that's owned by everyone and no one. Right? That's the real key. It can't pass the Howey test. We can't have, no one can shut it down. You can't have people upgrading it every quarter or every 6 months. You can't have a CEO of it. You can't have a CTO of it. You can't, you need to have something completely decentralized. Once you've got that, now the velocity of the digital property, and again, when you call it digital energy, you start to see it differently. You realize you can accelerate it on layer 2 platforms. And there are a lot of decentralized layer 2 platforms. So Lightning is a decentralized layer 2 platform. You could say that many of the other cryptos, to the extent that they're decentralized, they're layer 2 platforms, right? There's going to be a battle to see which cryptos are truly property versus which ones are security. And Gensler has said that on no less than 4 different occasions. He thinks many of these cryptos are security. So as we start to see more guidance there, he's also said some tokens are commodities. So as we sort out which token is commodity and which token is a security, you're going to have a competition of layer 2 tokens. But I think that you're going to see a competition there. And then you're going to see layer 3s. And layer 3s I define as CeFi, centralized finance applications like Square or PayPal or Coinbase or Binance, right? All of those are moving large sums of Bitcoin at high velocity. Square's got 30 or 40 million customers, and you can move any amount of Bitcoin from Square Cash Tag to Square Cash Tag instantly for free. So as you start to see those, they're going to create an accelerated finance. Between you and me, I'm not sure that decentralized finance needs a decentralized layer 2. It needs a decentralized layer 1. Like, you need digital energy to exist in order to move it at the speed of light 100,000 times an hour across 100 jurisdictions in order to do yield farming. So you need digital energy, and Bitcoin is. You need one. Do you need 2? Not necessarily. You need 1 digital token that you can move at the speed of light 1 million times a second. So I think that there's going to be a massive competition, and there's a market competition. Will centralized regulated entities in the U.S. that have gotten certified funds approved by the SEC, will they create that opportunity? Will Square and PayPal with mobile apps Will they do it on a mobile app? They probably also need to get SEC approval to offer it as a mobile app, right? Just because you have a mobile app doesn't mean you don't have to, you saw Abra has this issue where they have to get approval from the New Jersey authority to offer a yield product on a mobile app. So you're going to have the technology players wanting to get into space, call it fintech. You're going to have traditional players like Fidelity wanting to get into space through traditional funds. You're going to have these interesting Lightning-based things that want, there's non-custodial wallets in Lightning, like Moon and Breeze. Then there's custodial wallets like Shivo, right? And Shivo's got, can Shivo move Bitcoin around with a banking license? Sure they can. Why? Because El Salvador made Bitcoin legal tender. If you really want to win the DeFi space in the next decade, I think the winners, Raoul, are going to be the publicly traded institutions that know how to navigate the corridors of power, right? That the ones that, if you can take your company public and you can raise $10 billion via a registration statement, then I think you're going to be a big advantage. I think that Fidelity issuing an ETF is going to be a big advantage if they get their ETF approved. I think the NYDIG is going to have a big advantage.
The issue I've got with all of this is I get the AML, I get the tax stuff. It's this stupid securities law from 1933, 1934 that doesn't make sense. It makes it highly restrictive in who is able to access certain things. It's that what is a security is we're trying to fit something into a wrong framework.
Yeah, well, I mean, that's what the crypto guys would say.
Because anybody can buy a house. If you say it's a property, everybody should be able to buy it.
Yeah, but Raoul, if I created my own Mikey coin and then I pumped it on Twitter and I dumped it on the retail population after I gave a bunch to a celebrity who then told the world it was great, it's illegal and it's unethical. The truth of the matter is if you have a centralized group of people creating a token, which is a security, giving it to themselves and then selling it on the market and representing it as a decentralized property, you're crossing an ethical line and you're also crossing a legal line, and you can't avoid the ethical responsibility and the legal responsibility simply by saying, oh, it's new tech.
Classify it as a security is not the right way of stopping that. It doesn't stop it in equity markets. It doesn't stop it in the VC markets. It doesn't stop it at all. What it is it makes it more restrictive for people. Now, that nefarious behavior needs to be regulated.
If you understand securities law, you understand that they are securities. If I actually create 10 million tokens and I give 5 million to me and my four compatriots, and then we start marketing the rest, and we do it without a registration statement, without disclosing who owns the security, it is a security. You are violating securities law. The law is black and white. And so the only people that think it's not a security are people that don't know the law, right? If you look at everybody in the crypto space outside of Bitcoin, I think that most of them have never taken a company public. They don't have general counsels, right? They don't understand securities law as it stands. Like, I can't go, it would be inappropriate and unethical and illegal for me to go and give 1 million shares of MicroStrategy to a quarterback and then have him stand up and say, MicroStrategy coin is the future on Twitter. I mean, if you boil it down, I just think the upside on Bitcoin is underappreciated, and the upside on the other cryptos is overappreciated. I think the opportunity here is go long on Bitcoin. Bitcoin is a solution to every tech company and every finance company in the world. And the fact that it's decentralized property and is deemed as a commodity means it is the innovation. Everything else is speculation, and it's dangerous speculation.
Yeah, I mean, if you're referring to Bitcoin as the base layer, which I believe in, then that is exactly the case, and everything else is a risk curve. There is nothing else is the same as Bitcoin.
I think you could think of it as this: the layer one, the core monetary asset is Bitcoin. It's decentralized property, decentralized energy, and a commodity. The layer twos, there's going to be a lot of maneuvering there as to whether or not the layer twos are Lightning or whether the layer twos another crypto network that's permissioned or not. And there's going to be continual jockeying back and forth because of the AML KYC issues around them. Can you construct a decentralized exchange and that doesn't implement AML KYC that will still be deemed as acceptable, and that's going to be a bit controversial. And the layer threes are going to be the NYDIGs and the PayPals and the Squares of the world and the Coinbases and the Binances and the FTXs of the world. And the question is going to be, what jurisdictions will they operate on and what range of products and services will they offer? If you're an institutional investor and you just want to make an investment and sleep well at night and hold it for a decade or 100 years, then you buy Bitcoin. If you're a crypto venture capitalist and if you're looking for fast 100x returns and you're willing to break all this down, maybe you go into these other spaces. But I think you have to study and parse every word that goes on between the regulators and Congress. And if you're going to be in crypto ventures, you really need to be tracking very carefully the evolving regulatory, opinions of every jurisdiction, from China to Europe to EU to, Singapore to whatever. And you're going to have a lot more anxiety. There's a lot more risk, and maybe there's upside. I mean, you talk about risk curve. You're on a risk curve.
Yeah, you are. And maybe there's catastrophic risk in that as well. I mean, I'm not a big player of that alt space outside of ETH, really. But I'm interested in it just because I'd like to see how it develops, because it's just very interesting times. Now, use cases that get developed on one protocol can end up on another. A lot of things can end up on the Bitcoin protocol, and that's interesting.
I want to move my money at the speed of light 1 million times a second to the highest bidding counterparty with security, right, with trust. And so you can achieve that a number of different ways. I don't think that the old line traditional finance companies will get there very soon, right? My money would be probably on a crypto-friendly exchange that managed the regulatory issues with it, with a degree of deftness, right? I mean, the highest velocity is sitting in the crypto exchanges, but they've just got to work through the legal issue. If they can work through the regulatory issues, like KYC and AML, and what tokens they can list and not list, and whether or not they're allowed to give yield products or not, then I think they win. Otherwise, then it comes down to just a matter of marketing. Like if Apple were to get into the business and offer, Bitcoin on Apple Pay or something like that, or Google, they've just got these massive marketing machines, or Facebook. So the big guns haven't really entered the space.
No, but they're coming.
The good news is there is broad consensus that this is technology that's critical to the future of the economy. And you have a lot of senators, Senator Toomey, Senator Lummis, a lot of politicians, a congressional caucus, and you even have a lot of regulators, including Gensler himself, saying, look, Satoshi's innovation is real. He said it on the record, right? The subtext of everything, by the way, Raoul, is that the regulators are not questioning whether Bitcoin is commodity. That's the story, right? If there's one story. So there is a lot of broad-based support for digital property and for decentralized property, and it's clear it's here to stay, at least in the Western world. The Chinese aren't quite so clear on it. In places where people don't like property rights, like Cuba or North Korea, who knows what they'll do. But in the Western world where property rights are respected, this is just digital property. And the consensus is, if you disclose it, if you let us know, if you pay your taxes on the capital gains when you get capital gains, and if you abide by AML KYC procedures, then it's good property and it's an alternative to real property or security or anything else. And then the one big trade is right in front of your face, which is Bitcoin's going up 130% a year every year for a decade. Bitcoin is up much more than that this year. The cost of capital, if you're issuing expensive junk debt, is 6 8% interest. The cost of capital for Coinbase is 3.375% interest. The average person's cost of capital on a mortgage against their house is 2.5% interest. There's tons of money. You can borrow money at 5%. You can loan it out at 100%. Right? If the only trade you do is you buy $1 billion of Bitcoin with debt or equity or whatever and sit there and wait, it's a pretty good trade. And it's you don't need to take all these other risks. It's like people ask me, are you lending out your Bitcoin? Are you trying to get yield? I'm like, well, we're getting 130% yield on average for a decade, but we got 250% or whatever. Why would I risk losing it all for 5% more?
I mean, I'm the same. I don't do any of that because it's a risk that I can't quantify and it's unnecessary.
Take your $1 billion of cash and credit and convert it to Bitcoin. All the balance sheets of the world, all the balance sheets of every company, they're sitting on cash and credit that's crumbling, right? It's not even debated. Everybody knows the debt is losing purchasing power. Everybody knows the cash is losing purchasing power. And every one of these companies has the ability to borrow money or raise capital, at obscene rates, right? You're raising capital at revenue multiples that are obscene, and you're borrowing money at interest rates that are lifetime low. So there's plenty of capital. There's one obvious trade. Just convert crumbling cash and crumbling credit into digital energy, into pure property, which is not debasing or degrading. It's that simple. It's a simple idea. It's almost too simple. So everybody has to look for the second derivative, the third derivative, some complicated idea. And I guess where I come back on is like, I'd rather spend 1,000 hours figuring out how to borrow the next $1 billion and buy Bitcoin than spend 1,000 hours creating a software company to do something complicated with Bitcoin, or to spend 1,000 hours looking for the next Bitcoin. It's like, why don't you just borrow $1 billion at 0% interest and buy it and wait? Because Satoshi's innovation is real.